We have yet again another exciting Tesla stock video to get into here today, including analyst upgrades, some news on the Cybertruck, as well as an overall bullish market. Tesla stock is up in the green today by over 1%, and you are seeing 84% positive order values for the option flows. Today is the last day of fiscal year 2023, so this is a very strong sign there is good things to come in 2024. If you are someone that invests in Tesla stock, or you want to make more money, you want to grow your net worth, you want to retire and reach financial freedom, or at the bare minimum, you like to stay up to date with what's going on every day in the broader markets with a select, specific, sweet focus on Tesla stock, because hey, we love the stock. Hit that subscribe button to stay up to date with all of this information in hopes it helps you make more money. Let's go ahead and get started. And with that being said, I do think we should start with the option activity because, like I said, today is the first day, or actually Monday is the first official day of your 2024 fiscal year. This is the last day of fiscal year 2023. So what tends to happen on the last 2 weeks of any given fiscal year, which is the 38th and the 39th week of the year, last week and this current week, you tend to get a lot of selling, hedging, repositioning in certain stocks and certain sectors. So what we're seeing right now is very bullish positioning for the last day of fiscal year 2023. If 2024 looked negative and there was pessimism heading into next year, you would likely see that reflected in at least the option activity here today, because options are a derivative. They are a form of hedging your position, and you are seeing quite the opposite. Tons of bullish positions being placed on Tesla stock here today. 564 orders totaling $224 million with a positive order value of 84%. That means 84% of all of the dollars heading into Tesla options today are either selling puts or buying calls. Bullish directional positioning. That means 16% of $224 million is going into buying puts or selling calls today. This is by far the highest positive order value we have seen in quite a while for Tesla. As we do end fiscal year 2023, short positions currently stand at $20.33 billion in Tesla stock. Tesla is by far the most shorted individual stock here on the markets, and it would not surprise me, considering the bullish option activity, that some shorts also opt to cover on some of those short positions as well. Being short in Tesla might not make sense in 2024, considering all of the potential catalysts that we do have. In Tesla stock news today, Tesla has officially opened another V4 charging site over here in Italy. Piper Sandler analyst Alexander Potter has reiterated an overweight rating and a $300 price target on Tesla. He says, quote, "International plant shutdowns should not be interpreted negatively. So if Q3 results are a, quote, miss, we doubt Tesla will sell off." So what he is basically saying here is if we get a quote unquote miss, it's because expectations on Wall Street are 262,000 deliveries, whereas your realistic estimate is anywhere from 230 to 245,000 deliveries. So as long as we're in that range, you should not get a significant downside reaction in Tesla stock, and there's actually a greater chance than not Tesla's deliveries come in higher than 445,000 due to something we're going to get into here in this video, and you could see an upside move in Tesla stock. Troy Teslake is coming out with his final estimate for Q3 delivery numbers. These delivery numbers are expected to be released this upcoming Monday on October 2nd, and Troy Teslake believes 442,000 deliveries is the number. My personal estimates sit at about 434,000 to 440,000, but I think there's something that a lot of us might be missing here. Tesla has recently ran down their inventory numbers to some of the lowest levels that we have seen in a very long time. Over in Europe, over in China, there's basically no more Model 3s even left in inventory. So last we knew, Tesla had about 99,000 vehicles in inventory. It is possible that we see an upside beat beyond 440,000 deliveries, maybe in the 450, 460 range even, if more of these inventory vehicles were sold than we initially thought. And that's something that's a little bit harder to take into these calculations, but this is a massive positive. Like I have said many times before, this should really help out Tesla's earnings. If Tesla made vehicles quarters ago and they realized the essentially loss to make those vehicles, whether it's 20, 30,000 a vehicle, whatever the magical number is on a select model, well, they've already spent that money to make the vehicle. This quarter round, they might actually bring in a lot of that money that maybe they did not see in prior quarters, because as the bears point out, Tesla produces more vehicles than they sell for the last 5 quarters now. It is very possible that Tesla actually sells more vehicles than they produced in this current quarter here in Q3. So even if the delivery number is slightly lower, slightly higher, I still expect very good EPS numbers, very good bottom line net profit numbers for Tesla's earnings. And that is something that I strongly expect will be a positive catalyst for Tesla stock. eBay Motors revealed that September's fastest selling used car was the Tesla Model 3, averaging just 17 days in stock, followed by the Audi e-tron, and that's 20 days, and the Ford Mustang at 21 days. As Farsad does point out, the top 2 fastest selling used cars are EVs. Think about that for a hot second. And that's exactly it. EVs are selling, and I do believe that the Model 3's numbers were boosted because of the lack of inventory. That would also make sense to me as well. Roland Percher shares us this photo here today. This is a chart of the top selling models in Europe from January through August, and 2022 is this yellow bar right here. Guess what the top selling vehicle in Europe is? Well, it's the Model Y. And look at the growth. 219% growth from last year's numbers. Q4 is always the highest delivery quarter for Tesla, so I would imagine this grows even larger here in this next quarter. You're looking at hundreds of percentage points of growth here. Nobody else is even close to that. The next highest model is the Renault Clio, I don't really know how to exactly say that, and the Skoda Octavia. These are up 58% and 61% respectively, but nowhere near the level of dominance that Tesla is seeing in Europe. The BEV market share penetration is now hitting about 22%, if you will, 21.7% here in Europe. Last year's numbers were less than 15%, around 13% or so. So you are seeing EVs are really picking up steam in Europe. Sawyer Merritt shared this news yesterday with us. Says Apple's work on the Apple Car has, quote, lost all visibility at the current time, according to Apple analyst Ming-Chi Kao. He says that if Apple does not adopt some kind of acquisition strategy to make inroads in the automotive market, it is unlikely that the Apple Car will be able to go into mass production, quote, within the next years. Just to rub it in, Sawyer Merritt makes this post here today responding to himself and says, since Apple first started working on its own car in 2015, that was a whole almost 9 years ago now, Tesla has launched the Model X, the Model 3, the Model Y, the Tesla Semi, the refreshed Model X and S, the refreshed Model 3, soon to be the Cybertruck, and FSD Beta. Meanwhile, Apple cannot even come up with a single sellable vehicle yet in almost 9 years. That is not great for Apple. Tesla has now decreased the price of the solar panel plus Powerwall package in select areas in the US by about 3.5%. And Lucid has now released a new video showing the opening of their new Saudi Arabia factory. Phase 1 production capacity is 14 cars per day. That is almost laughable, I would say, but at least they're producing something. Apple isn't even producing a car. 14 cars a day does not sound great, but at least it's something again. Automotive news says the Tesla Cybertruck could boost the brand's already sky-high loyalty. Only 10% of Tesla owners leave the brand for another EV. Top choices include Rivian, Mercedes-Benz, and BMW. The coming Cybertruck offers another reason to stay with Tesla, says this analyst. And that's important to point out that Tesla has not had a truck yet. So I think the truck is going to be wildly successful. That's clear. But hey, only 10% of Tesla owners end up switching to another vehicle. That is higher than any other brand out there. And it's no wonder why Tesla has been cutting prices over the past year or so, because they want to get as many people in Teslas so then they end up upgrading over the coming years. You want to get people into your ecosystem. So I think a couple years from now, a year or two from now, a lot of the analysts are going to be saying Tesla made the smart choice by cutting prices in 2023. And with that in mind, just imagine where Tesla's stock is going to be. This one is exciting. Tesla starts the construction of Hollywood's supercharger with a diner and a drive-in theater. We reported this news about a month ago. Tesla was going to get the permits for this, and it looks like they have got them, and that they've already started construction on this. And we know how Tesla operates. When they start something, it does not take all too long to finish it. So this is something that could be coming here in the near-term future. And this alone is going to captivate the people that see it. In and of itself is like advertisement. Dan Ives went to X today to write this post. Tesla's Q3 deliveries likely hit Monday in the morning, Monday a.m. While from a demand perspective, we believe Tesla was on track to hit 460 to 465,000 in the quarter. Longer than expected downtimes of the factories in Shanghai and Austin caused likely 20,000 units to shift into Q4. 440,000 is in line, or 440,000 line in the sand is our view. So again, back to what Piper Sandler said, nobody's really expecting the Wall Street current estimate of 462,000 units. It's closer to about 440,000 units. Even a little bit lower than that, you could also make an argument for. So if Tesla comes out and misses the estimates, did they really? No. And I wouldn't expect Tesla stock to sell down too much on that news. But the initial reaction, it wouldn't surprise me to see Tesla sell down, even if they delivered something like 450,000 units. Just because that headline number, well, is lower than the estimate. Now, let's go ahead and get into some of the data that came out this morning. Then we'll get into the charts with Tesla, the bond yields, oil, what everything is doing out there here in the markets today, and break down this move that we are seeing. So the biggest data point that really caused this at least initial bullish reaction in the markets was probably your core PCE month over month coming in below expectations at 0.1%. Expectation was 0.2%. So much better than expectations there. Personal spending came in at 0.4%, in line with the estimate. Personal spending also came in at 0.4%, in line with the estimate as well. I think you are getting this end of the day sell-off for a couple of different reasons. Number one, it's the end of fiscal year 2023. If you look at a Tesla or you look at small and mid-cap stocks, those areas of the markets look very attractive to be an investor in 2024. They have not really participated in this rally. Tesla's still at the same place it was throughout most of 2022. This 2023 rally, well, it really didn't break Tesla out of a new range that we have been in almost the last 2 years now. So from that perspective, markets, they want higher growing stocks, even if they have a higher PE multiple. Well, if you add the growth rate on that and you turn it into a PEG ratio, Tesla's very cheap. Your Russell is very cheap, but if you're looking at an Apple or a Microsoft or an Nvidia, Google, Amazon, these other stocks that really control the indexes, right? Apple is 12% of the NASDAQ. I believe it's like 8%, 9% of the S&P. It makes sense on a risk to reward kind of scale here to hedge your portfolio for fiscal year 2024 if you're an index investor, which is like 95% of big money. That's what they do, is they have to at least follow the index. It makes sense to hedge. It makes sense to take some profits to sell some stock. So I think that is the big effect that is happening right now. I think the real question is, does that continue into next week? We know the government is going to shut down on October 1st. That looks very likely. It also looks likely that we're going to go through a data blackout. How does that affect our markets right now is very different than other points in time where investors are hyper focused on economic data, on inflation data. If we get an extended blackout period for economic data, how is that going to affect the markets? That is something we don't know. So there's a lot of uncertainties out there, and it doesn't look great. The other thing I would point to is PCE coming in better than expectations. That initial algorithmic reaction is probably what helped boost the markets in the beginning of the trading day today. But in the grand scope of things, I think investors are smart enough to realize the Fed made it very clear on the last meeting that we're not going to get a soft landing. The Fed basically said even if inflation comes down to 2%. If the economy is doing well, is doing strong enough to withstand the rates where they are, they will raise rates further until they see unemployment rise and GDP fall. So they're really going against the soft landing narrative. So this beat in PCE today, unfortunately, really doesn't mean much. In other news that I would like to not leave out of this video, the UAW is expanding their strike at Ford and GM, but they cite progress at Stellantis. Prior round of strikes that we've seen, the UAW was continuing strikes on GM and Stellantis and not on Ford. It looks like now Ford is also being striked upon as well. Now this one is actually very large compared to the other strikes that we have seen so far. This says the first ever simultaneous strike against the Detroit 3 automakers enters its third week, expanding to Ford's Chicago assembly plant and GM's Lansing, Michigan assembly plant, covering about 7,000 workers, Fain said in an announcement. So these two plants are massive. 7,000 employees is not something to sneeze at. And like the GM CEO said, for every one UAW worker, there's about 6 other jobs that revolve around that one worker. So in theory, if 7,000 workers just essentially got laid off, then another 35,000 plus workers are also being affected. This is, again, not great for the economy in a period of time when you're actually starting to go through a slowdown. The government shutting down as well is going to lay off hundreds of thousands of workers. A lot of them will still need to actually work, but will not be getting paid. They'll get the unemployment insurance benefits, but a drastic reduction in their income will for sure happen. So that's also not great for the economy. That's not good for spending and retail sales heading into the holiday season, which the consumer spending money accounts for about 70% of GDP. So these two things alone could be enough to tip us over the edge into a recession. And I think that's something the markets are quite fearful upon right now and to be honest, quite jumpy about. The 2-year Treasury is down about 2 basis points today. And the 10-year treasury is down about 3.5 basis points today. So when yields are falling, you're actually seeing investors buying the bonds. It works like a dividend stock, right? If a dividend stock pays the same dividend, but people buy the stock and the stock goes higher, your dividend yield goes lower. Vice versa. If people are selling that dividend stock and the dividend stays the same, the yield increases. So this whole time, yields have been going higher. Investors have actually been selling the bonds. Today, they are starting to buy the bonds. The markets, as of right now, the NASDAQ is almost negative. So if you do see the markets go negative and maybe even really negative by the final couple of minutes of trading here, that is more so a safety kind of move rather than just selling off bonds or selling off stocks because bond yields are rising. The last thing you want to see is bond yields falling and stocks falling. That means investors are looking at the bond market for safety. So we're not seeing that too much right now, but you are seeing it a little bit, as you can see with TLT is up 0.17% here on the day today. Crude oil is down 0.61%. That is good. It's not enough to obviously cause the markets to be super bullish, but that is a positive rather than a negative. The regional bank ETF is up 1.60% today. That's actually surprising, and I would say that is very positive. You are seeing USO, which tracks crude, that is down 0.74% today. Again, another positive. And the dollar is down a little bit today. The dollar has been something that has really been affecting the markets a lot here recently, because if you're an Apple, if you're a Tesla, if you're any other multinational company that reports earnings in US dollars and you take in foreign currency, you take in that currency, you convert it back to dollars. The higher the dollar is, the less dollars you're going to get for your foreign currency. So that puts pressure on earnings, and you have seen the dollar go up quite a bit as of recently and is not great for company earnings. This is a big effect we've seen throughout 2022, and this was a big reason why stocks were selling off. I would say this is even more important than bond yields. So if the dollar continues to rise, it could mean a lot more downside for stocks. As far as Tesla stock on the charts, like I said at the beginning of this video, Tesla stock is up about 1% at the time of recording this video. The last hour or so of the last day for fiscal year 2023, which is today, between 3 and 4 p.m., the last hour of trading, can be very volatile. That's where you're going to get a lot of the positions kind of being rolled over, being sold, being hedged, being bought. And I would expect a big move in the last hour or so of trading. So likely by the time you guys are seeing this video, Tesla stock could be up a lot more than 1%. It could be down. It could be negative on the day. So go ahead and keep that in mind. But if we're looking solely at the charts here on Tesla, as you guys know, we have bounced off of now 4 points on this ascending line of support. 1, 2, 3, and 4 now. And you bounced right off of that. You bounced above your 100-day moving average, and even today, you're fighting with your 50-day moving average. It looks like you found a little bit of resistance here at $251.21 per share, but you are pretty decently off of your 100-day moving average that is down here at $242.32. So that is a great sign. The MACD is starting to bottom out again after recently going negative. You're starting to bottom out. We'll see if that starts to curl up. That would be a very good sign as well. And the RSI is at 47.40, so it's pretty neutral, the neutral level being 50. You know, it could go either way from here, and I think it really depends on what the broader markets do, as well as the delivery numbers, earnings, and the upcoming Cybertruck event. These things I expect to be bullish for Tesla stock. If we can get above this downtrending long-term level of resistance, which if you think that's going to happen in a week or two, is going to be around 265 to $263 per share, just depending on when you actually hit that level. If you break above that, that's where you get a run likely well into the $300 range. That could happen by the end of this year. As you guys know, if markets are up 10% or more heading into a down September, you tend to end the year higher about 80% of the time. So as far as historically speaking, you should see a rally in the last couple of months of this year, specifically November and December for the Santa Claus rally. That looks to be still intact. It obviously depends on the government shutdown, the strike, the economy, a recession or not, but it looks good for Tesla stock as of right now. And finally, the yield curve inversions. The 10 and the 3-month is still inverted 0.97%, but you did hit the low inverted about 1.88%. So you have uninverted quite a bit here on the yield curve. And like we have said many times, when you actually uninvert here on the yield curve, that is when you are usually imminently heading into a recession. This is usually not a great time to own stocks. Usually once the uninversion starts, it can go pretty quickly, and right before then, you're usually a month to 3 months before you start an actual recession. Same thing here with the 10 and the 2-year yield curve inversion as well. You are inverted 0.45%, and this is not as bad as you have been recently. You were inverted over 1%. So you have retraced this inversion about 50% on both of the important yield curve inversions, which again, you tend to uninvert when you are right about to go into a recession. So if history holds up, which it has every time for the yield curve inversion, you could be going into recession soon. So that's the argument that you could really make here. There's a strong bullish thesis. There's a strong bearish thesis. I think we really need more data and more clarity on what's going on in the economy right now before the markets take that big move higher or lower. I will say if the government does shut down next week and we start to miss the data reports that we're supposed to get, investors might fear the worst, and that could be really negative for our markets. So that's going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you guys are still watching this video. If you guys want to take it a step further, come trade with us live in real time. Come hedge out your portfolio, make some YOLOs, get access to all of my trades every single day that I am making. Link down below in the description of this video. You guys have a fantastic weekend and a great rest of your day. My name is Michael Tyler, and I will see you in the next one.